1.1 million ounces. That is gold leaving COMEX in 30 days. 6.5% of registered supply gone. That is not normal flow. OG John AG here. Drop OG John AG in the comments if you are here paying attention and actually learning. Now, gold is stable on price but unstable in structure. Let's get straight into it. Lead story today. COMEX registered gold declines by 1.1 million ounces. That data comes directly from CME Group warehouse reports. Coverage ratio remains near 42.5% despite the drawdown, effective across the last 30 trading sessions into 4 May 2026. This follows sustained physical withdrawals across multiple months. The unusual detail is steady outflow without price breakdown. The timing is what deserves scrutiny, not the outflow itself. The timing. Think about what that sequence actually means. Physical gold leaves exchange custody while futures activity remains active. That signals ownership preference shifting toward allocation, not liquidation. What does it mean when holders remove metal but keep exposure? The ones paying attention already know what to watch next. Before we go further, if this kind of data-first analysis is what you have been looking for, hit the like button right now. Subscribe to OG John AG 1.0 and share this with one person who needs to see these numbers. Now, back to the data. Before I show you the full data picture, consider this. The last time COMEX Gold saw sustained withdrawals without price collapse was during accumulation phases. That is not a guarantee, but it is a pattern. The data is already telling you something. Let's build it out. Now let's build the full picture, because COMEX vault flows do not exist in isolation. CME Group warehouse stock reports confirm the 1.1 million ounce decline. COMEX open interest data shows no equivalent collapse in contracts. World Gold Council demand data shows continued central bank buying trends. Shanghai Gold Exchange closure removes Asian demand visibility for 5 sessions. That is 4 independent sources aligning. The 6.5% decline occurs in 30 days. That compares with slower drawdowns historically. That is an accelerated pace relative to prior quarters. The second data set is unchanged open interest against lower supply. The third data set is central bank accumulation continuing globally. The rate of physical withdrawal is not reversing. It is holding steady. The data is doing the talking. The ones who were dismissed for focusing on vault flows are not being dismissed right now. That is not coincidence. That is a pattern. And here is what makes that picture even harder to ignore. COMEX coverage remains near 42.5% despite falling inventory. Central banks purchase over 200 tons in Q1 2026. At the same time, gold price holds near $4,560 without breakdown. That is not a contradiction. That is the setup. And before anyone takes that as a signal, setups do not resolve on schedule. They can persist longer than expected. What this tells you is structural positioning strength. The timing is a completely separate question. Anyone who claims to know the timing is selling something. Here is the number most people are not talking about. 5 trading days. That is how long Shanghai has been closed. That is 5 sessions of unexpressed demand. Now China reopening risk, because this is no longer a backdrop. It is the primary variable. Shanghai Gold Exchange closed since April 30th. Last available benchmark print from April 24th session. Physical demand accumulation occurs during closure periods historically. At the same time, oil prices rise over 5% on Hormuz tension. That increases inflation expectations globally. Elevated inflation keeps central banks cautious. Markets are still pricing stable reopening demand. Look at inventory withdrawals and tell me that probability. When markets start pricing accumulated physical demand, gold reprices upward. When demand disappoints, gold reprices downward quickly. That is the historical pattern. Every time major Asian markets reopen after closure, volatility increases. It has not been different yet. Gold Western spot trades near 4,560. Shanghai equivalent pricing is not available during closure window. Short-term picture shows balance without conviction. Key event is Shanghai reopening session. If physical demand is strong, price gaps higher immediately. If demand is weak, price adjusts lower to reflect it. That is the only short-term read that matters right now. As for trading it, I cannot see a clean picture here. Lower time frames show conflicting signals across sessions. I cannot tell you what gold does tomorrow. Nobody can. If you think you know, good for you. Current environment shows structural strength, but timing uncertainty. Sidelines is not weakness in this environment. It is the only edge there is. I have called this market both directions. I will call it again when clarity appears. Right now, I do not see it clearly. The tape decides, not me. Here is the honest truth. Both sides of this trade have a real case, and the one you ignore will cost you. So let's run both. The bear case is real. Dollar index remains firm near 98 range. Real yields remain elevated, limiting gold upside. Oil-driven inflation delays central bank easing expectations. The bull case is equally real. COMEX vaults lose 1.1 million ounces in 30 days. Central banks buy over 200 tons in 1 quarter. Physical demand uncertainty builds during Shanghai closure window. Size correctly. Know what you are in before entry. The physical market already knows where this is going. The paper market is still arguing. That argument does not last forever. Everything shown today points to one thing. Structural pressure is building beneath stable prices. The only question is when price reflects it. Don't take my word for it. Verify every number I gave you today. Check the data yourself. CME Group, World Gold Council, Shanghai Gold Exchange. Logic over hype. Always. If this analysis added value, like this video right now. Subscribe to OG John AG 1.0 so you never miss a data drop. Share this with one person who needs to see these numbers. The ones running the OG John AG 1.0 playbook do not wait for confirmation. They position before consensus. The ones who verify do not argue about it. The ones paying attention already see the shift happening. Sit with that. OG John AG 1.0 out.